AP seeing a growth of 9%. Finally, LIC, again, weak growth on a very favorable base. November premium has shrunk by about 27%. First 8 months, a growth of 16%. The total AP in the month of November is down 19% and retail AP down about 12%.
Okay, all right, got it. Thanks very much for that, Yash. Speaking of brokerage notes, just watch out for 2 property stocks. Keep them on your radar as well. There's Godrej Properties, where Jefferies has come out with a buy. Their target is 38.50, which is a good $1,000 ahead of where the stock is right now. So, they're very bullish on the prospects. We'll tell you why in just a bit. The other one is going to be Macrotech. On Macrotech, there is a antique note that's come in. Again, it's a buy call on Macrotech. And the target price has been increased to 18.51. So 2 property stocks where the brokerage notes are fairly optimistic at this point in time. So we're about to get started. Cautiously optimistic, positive bias. Can the bulls pick up the momentum? That's the critical question. And can FMCG stop falling at least? If not, moving higher, can those stocks stop pulling the index on the downside? The bell has gone. Okay. JSW Steel is the winner, about 1% up on that stock. There's BEL, which is reacting well to some recent order win announcements. Grasim, Wipro, Tata Motors, which is hiking prices of some of its models, up about 0.5%. Infosys is contributing on the upside. Apollo Hospitals, Shriram Finance. So you can see there are no clear sectoral moves, at least as of now. It's very disconnected and disjoint. And it's also shifting extremely fast. On the downside, Tech Mahindra, Titan, Axis Bank, TCS. These are some of the names on the way down. SBI Life down about 0.2% as we speak. Let's look at some of the consumer stocks and see what's going on. Very flat now. So like I said, they've at least stopped falling more. But yesterday, that painful reaction to Godrej has played out. Lever is flat. There's some additional selling in Trent, 0.5% down on Trent. Tata Consumers are also on the flat line. That's how it's playing out. So extremely quiet for the large cap space. The Nifty is barely changed, 10 points up.
Well, that's right. Well, let's look at a few stocks then. Greaves Cotton, the stock is bucking the trend because, noted investor Mr. Vijay Kedia went ahead and bought a stake in the company yesterday. It ended at the high point of the day yesterday. And in fact, today as well, it's following in on those gains. I'll be interested to see whether it sustains these gains because currently the stock has very, very large volumes. And yesterday as well, it already had ended higher. ITI continues its good run. The stock is up close to around 35% in a single month. Not making a mistake. Yesterday and today, it's up more than 20%. Today as well, it's higher. Swiggy, swinging it away, because of that brokerage note that Mangalam told us about. So that stock as well doing quite well. Relica is the other one that I'm looking at. There is hopes that, in fact, that Berman open offer gets the green signal. So that explains why that stock is doing quite well. Let's pull up JTL as well. You have Phillip Capital that's come out with a note. Yesterday the stock had ended lower, but now they're expecting more than a 45% upside to JTL. So, they've given their reasons with regard to profitability, volumes, capacity, balance sheet in better shape as well. It's come up drastically from the recent peak, but JTL is a stock maybe that should come up for you on the screen. As of now, we'll wait by up close to around 1%.
All right, we'll keep an eye out on that. A couple of these interesting moves coming by in the jewelry space. We have Kalyan Jewelers, which is slightly under pressure. Titan from the bottom, from the front line end is not doing too well. The smaller jewelry players are doing a lot better. We have something like Thangamal Jewelry, TBZ, all of them bucking the trend in the overall weakness that we're seeing in the jewelry space itself. But the stocks that really are on fire this morning, we have IRB Infra. November toll collections rising by 23%. That stock is up around 2.5-3% Metropolis, the stock recovered about 4% from the lows yesterday's trading session on the back of that core diagnostics announcement that has come in. That stock is up around 1.6%. Glenmark as well. The street likes the data that is coming from the trial, the first clinical trial of the cancer drug. So that stock too sitting with a gain of almost 3%. Syngene, there are reports that Biocon will sell about 2% stake via a block deal at about 825 odd rupees. Wonder whether the deal has happened or not because stocks surged closer to around 900 rupees out there. BEL, a mild order, an order win of close to around 634 odd crores, so mild green on that stock. Just keep an eye out on LIC now as well because this is the first monthly data that has come in ever since the stock's inclusion in FNO, and it's weak growth on a favorable base. So the stock, because it's in the FNO, will perhaps see action on both the long and the short side, and as a result of which the stock down about 0.6%.
I just want to point out some more names. It's a very quiet day for the index, but don't let the index fool you because there's so much going on at the individual stock level. Just heard us speak with Borosil Renewables. Now that stock is up about 4.5%. And it's had a very sharp increase in the last couple of days since that anti-dumping duty was announced. Wari is putting on more gains, 5% higher. Sagility, which has had a great recent move, again up about 5%. And watch out for some of these textile players. Remember yesterday, Indocount, Trident, Gokuldas, all of them were surging. That trend is intact today as well. Not sure if they're anticipating, some kind of, order shifts away from China into India as the US looks at tariffs. But I think that plays well and truly on. Positioning is building ahead of President Trump's inauguration.
Yep, just a word on Swiggy. Swiggy, the stock opened about 5% higher. From there, it's seen a bit of profit taking.
Yes.
The reason why, I believe that CLSA is bullish on the stock. Two things we need to keep an eye out on. One, CLSA believes that, the compounding of revenue for the quick commerce business would be 78% over the next 5 years. That's a tough ask. Secondly, what they're expecting is that, the valuation discount between Zomato and Swiggy would narrow at 22%. That's the lowest that anyone has given at a discount because, the average on the street, when you look at all the brokers that have initiated coverage, would be anywhere between 30 to 35%. So that's something we'll keep an eye out on. And the third part is the risks that they spoke about when it comes to regulatory action and competitive action as well.
Yeah.
So those are a couple of risks that we need to keep an eye out on Swiggy itself. High expectations, high valuations and low valuation discount is what they're expecting.
Absolutely, which is why for quick commerce, when my biggest watch point is the great Amazon entry. And once we know what pricing and discounting is happening after that, I think then we can have a clearer idea on projections.
Just one stock, Borosil Renewable, just take a look at that stock. It's up 30% in this month itself, and it's building onto the gains. Clearly, the street likes what the management had to say. They'll be able to sell whatever they make. There could be a price increase that comes about from the Q4 onwards. And the aspiration is to take the standalone business, which is bulk of their margins, towards the mid-20s. Last quarter, it was around 18%. So Borosil Renewable should come up for you on the screen.
Absolutely. So lots of stocks in focus, but the market is absolutely flat. So let's get some perspective going. Yogesh Patil, Chief Investment Officer of Equity at LIC Mutual Fund, is with us. Yogesh, good to have you on the show today. So, let's start with the broader picture. The market has navigated a lot of different worries. Slowdown in earnings, slowdown in consumption, and then, of course, a lot of the global headlines in terms of tariffs and what's happening with interest rates. You tell us, broadly speaking, for the next 1 year or so, do you see the market higher? Do you see it range-bound, or do you think that there is still a possibility of perhaps, the correction opening up again?
Good morning, and thank you very much for hosting me on your channel. See, long-term equity investment is like an infinite game, where you need to accept a lot of positive news, negative news, and developments as well at the same time. But we should not forget, India is the only country which offers a very high growth, and high growth comes with a long digital growth, basically. So India is completely growth-driven story, driven by capex, infrastructure investment, urbanization, decarbonization, and basically, up to some extent, consumption. So it is a long driver, and we do see there might be short-term challenges in near term, maybe 1 or 2 quarters. But in terms of long-term growth, India is still heading for a very good growth, and China Plus One is actually picking up when you talk to corporates. And when you see the new project announcement, the manufacturing almost account for 40 to 45%. It gives a confidence that Indian entrepreneurs actually thinking about China Plus One and India growth story. And the second point, if you see the last 30 years, the kind of capex we've seen in last 30 years, the next 10 years could be very different. And the major growth drivers could be real estate and private and government, not government, basically PSU capex. This almost account for almost 70% of the gross fiscal capital formation. And this could be, we expecting a roughly higher double-digit growth in these 3 segments, and which will drive the India growth story. And this will reflect in the sectors and in the companies. And beyond a certain point, then consumption will also pick up. As of now, consumption is slow because of a lot of structural changes happened in last 8 years. After demonetization, GST and COVID actually completely broken the legs of informal sector. Today, as per RBI, 64 crores employees in informal and only 6 crores in formal. So slowly, it will take some time to adjust, and a major slowdown in consumers and consumption is basically lack of new buyers. And eventually, someday they will get a new jobs, and the new buyers will come for this segment. And then only we see a consistency in growth and the sectors. As of now, the India growth story starts with manufacturing, infrastructure, and then followed by consumption and improving the per capita income. Today, the per capita income is completely skewed towards richer people, maybe 2-3% of the population, and it has to be narrowed down beyond a point. Then only you see consistent growth and continues. As of now, in initial years, it will be completely driven by capex and basically manufacturing based.
We'll take that point, Yogesh. Just, hold on for a second, because the stock of the moment definitely is Religare. Opened with a mild gain, but now look at the volumes and the stock price move piling up almost 8% closing in on that 300 rupee mark on the stock. In fact, today's high has been above that itself, a 52-week high for Religare itself. The nod coming for the Burmans to purchase additional stake in the company, having the street excited. That's about a 1-month chart, but just look at today, the intraday today itself opened with a mild green tinge, and thereafter volumes and the stock price action kept picking up itself. So that's about Religare. We'll keep an eye out on this story as it develops. Yogesh, coming back to you, you said that, India's per capita income story and consumption story, the Indian economic story continues, but a large beneficiary of that would perhaps be the financial space as well. Not asking specifically about Religare, but what's your view on the financial sector? Would you look at banks, private sector, PSU or NBFCs?
Definitely, India has to grow. Definitely, BFSI segment will follow that. But in BFSI, the competition is currently very high, and there will be winners. We need to choose. But as of now, we are preferring private banks and selected NBFCs. Those who have proper discipline, and any company which is not have proper credit, so normally we are avoiding those companies. So as of now, we are bullish on selected private sector banks and selected NBFCs, but broader theme in BFSI is completely actually disappointing in terms of, let's take MFI and even the regulator has highlighted there is a risk in unsecured loan. To that extent, we are avoiding some of the banks and NBFCs.
Okay, all right. Hi, Yogesh. Good morning and good to see you in. This is Nigel on this side. Well, we're going to have a new RBI governor. The broad consensus is that we'll have continuity. However, the MPC committee, the constitution is going to have large number of new members. How do you see this, playing out, and your initial take?
See, definitely somebody is joining is definitely come with a lot of expectations. So I'm sure that we expect continuity in the reforms and maybe decision makings going forward also. At the best, I can say this one only.
Yogesh, so okay, let's take the the overall portfolio construct. What would be for 2025? What do you see as your top 3 overweight themes or sectors?
Okay, it is a combination of capex and manufacturing. That start with power sector. We are bullish on power sector, industrials, chemicals, up to and IT and selected selected financials. At the same time, we see improvement in rural economy is a combination of higher realization prices, higher output, lower agri cost, and the government's indirect support to the rural economy. So we see these are the segments which could be seen a good growth in FY25.
All right. Just before we again come to you for the last question, keep an eye out on Oracle. It's a listed IT company in India. No direct business relation with the US Oracle, apart from the fact that the US-based Oracle, the international company, is its promoter, holds about 72.6% stake. In the past, we've seen every time there is a big up move in Oracle overseas, we see an impact on the way up in Oracle Financial Services in India as well. But overnight, post-market close, Oracle was down 7% after a weak second quarter performance, and as a result of which we are seeing a bit of a rub-off in the Indian stock as well. It's seen a decent move, but the last couple of days it has seen a decline from the highs itself. So we'll watch out for Oracle, how it performs in today's trading session, and whether this selling is largely sentimental, and or if there is any business relation between the two as well. But speaking about Oracle, again, Yogesh, the IT sector, the Nifty IT index has seen some recovery in this month itself. It's up close to around 7%. The best sectoral index that the way it's performed so far as compared to the market. Do you have a view on the IT pack?
Yeah, we are positive in IT. If you see the last 2 years, the sector was struggling, but from last quarter, the commentary of management has changed. From now, no one is talking about the project cancellation or delays. Everyone is looking positive, and the commentaries are very positive. And the selected growth is coming from geographies and a segment like BFSI. But at the same time, we need to adjust all these things with Trump government, how the Trump government behaves. As of now, bottom, basically negative part of the negative bias from IT is actually behind us. But how the Trump administration take this forward. But as of now, sector looks good if you ignore government point of view. But even individual companies are highlighted, they're getting good business and good visibility from their clients.
Okay, all right, got it. Thank you very much for that, Yogesh. Good to have you on the show today. Well, just a quick spotlight on the market before we move on to our next big theme. Market's absolutely flat, not going anywhere, just about 22 points lower on the Nifty now, so there's a tinge of red out there. The big story, we do have a new man coming in and taking charge at Mint Street, and it's going to be Revenue Secretary Sanjay Mehrotra, who will succeed Shaktikanta Das as the RBI Governor. Now, he takes over today, and this is going to be a 3-year tenure. In a bit, we'll have experts joining in as well to talk about, of course, the legacy that Mr. Das leaves behind, and more importantly, the task ahead for Mr. Malhotra. Lata is joining in with her editor's take and perspective. So finally, the suspense is over, Lata. It's going to be Mr. Malhotra.
Yes, it is always a suspense because unlike other positions, the governor is not appointed by any committee that news can leak. It's appointed only by the Prime Minister. And so anybody who is guessing is giving you their best guess. They're not giving you any stories. Okay, coming to Sanjay Malhotra himself, the big strength would be that you know how government works. You know the government cash flows, you know their processes, their priorities. The second advantage I think he comes with is he's a computer science graduate from IIT Kanpur, apparently ranked 9th in IIT-G, All India. So clearly very bright in terms of being able to take this new world of fintech, AI and ML. So with, finance getting so closely welded with technology, you have the right man, perhaps. The negative is everyone perceiving that, he would be a government yes man. Not at all borne out by facts. In my own reporting career, Bimal Jalan, Y.V. Reddy, Subba Rao and Shaktikanta Das were all ex-Finance Ministry secretaries, and I think they all led independent innings when they played at Mint Street. I think, when you are in the governor's position, it is your headache when the exchange rate suddenly starts dipping or gets volatile. It's your headache if inflation goes above 6%. It's your headache if yields go up, and therefore you become an RBI man simply because your responsibilities, your KRAs are very clearly defined, and the whole world, the entire financial markets are watching you. So I don't buy this idea of yes man. Even if the governor, if Shaktikanta Das was governor, he would perhaps have cut in February. Actually, a person from Finance Ministry is able to coordinate better because he may have IAS friends in, consumer affairs, in agriculture. So you can talk across and say, potato prices are rising. Are you guys doing anything about it? There can be coordination. I don't see it as negative at all. For me, the only challenge for him is that he will lack a vice captain. Michael Patra, Deputy Governor, absolutely the pillar of RBI's monetary policy thinking, is going to end his term in Jan. And Sanjay Malhotra could do with a bit of hand-holding. I think he will sorely miss it.
Well, that's very interesting and great context to have, Lata. So, as you put it, the captain and the vice captain both are set to change in very quick succession.
I think the team only look new, right? Because
yeah, the external members are also new, but the external members come for 48 hours. Yeah. They don't really fashion. RBI is run every minute when it is intervening in the market, when it is buying bonds or not buying bonds, when it is responding to the day-to-day actions. So that remains unchanged.
The vice captain will be missed.
Captain, vice captain changing together is, I think...
So I think it'll have to be a very quick learning curve and sort of a quick handover for Mr. Sanjay Malhotra.
Yeah. I'm just
Dr.
guessing.
Patra.
This is totally speculative. Maybe they will extend Patra, though sources tell me that looks unlikely. The ad is out.
With so much that Lata knows, I'm wondering, I'm just out of curiosity, did you ever get a call from any of those guys to be, at least in the team, if not the vice captain?
They call me to report on Governor.
She knows exactly what's happening in those corridors. Okay, all right, let's take this discussion forward. We have, two guests also joining in, Asim Dhru, who's the managing director and CEO at SBFC Finance. And of course, he's no stranger to the Indian financial services world. He's seen it from close quarters for many, many years. And also we have Tamal Bandyopadhyay, consulting editor at Business Standard, who's also seen the ins and outs of the RBI for many decades now. Gentlemen, thank you very much for joining in. First question, Tamal, to you. So, people from North Block eventually making their way to Mint Street, it's not new at all. How do you see this appointment, Mr. Malhotra, coming in as he does when there are high expectations from the RBI to start cutting interest rates and boosting the economy?
No, it's absolutely in sync with the tradition. I mean, there are exceptions, but primarily it's the North Block that at times directly somebody who is in charge of certain things come directly, like Subbarau's case, finance secretary, or the current case, and sometimes like Dr. Jalan or Dr. Reddy, who had been there and coming there. So that's the thing. There is no surprise at all. But the way the things have been done, that's a bit surprise, because Reserve Bank of India governor is something which is extremely critical, not only now but always for Indian economy. So I think it would have been planned a little better, and there is this kind of suspense, so much of drama and so much of speculation. That's probably not the right way of doing it. So that's the only part. Otherwise,
well, Tamal,
it is it's the tradition. There is. I don't think the government, particularly in the past with one particular governor, they did not, which was an outsider meaning non-IS. I would say even two, they were not very happy. So they have come back. But just one point I want to make, what Lata mentioned is this. The perception of North Block person getting into Mint Road is like Trojan horse. But that perception is not correct at all. Whenever somebody comes to the Reserve Bank of India, the person becomes the RBI person, RBI governor. So RBI independence is so critical, and always the person at the helm is aware of that. So don't think that because of North Block a person has come and everything the government wants, it will be done. That has never been done historically.
No, absolutely. I think central bankers take their position with a lot of responsibility and pride in India and around the world, right? We've seen the same debate play out with the appointment of Mr. Trump and, what happens to the Fed chief there. But it's the same situation that, they act as independent men and women.
I think, there is a lot of unhappiness, as Tamal said, in terms of the manner in which, the nth minute. Tamal, I'm on the government side on this. I think it was done with a lot of thought, and it was a very gracious act. My sense is they did not want to announce that Shaktikanta will not be governor when he is presenting the policy. I mean, there is a little bit of dilution of his authority when he says RBI will ensure that inflation comes down to 4.2 next quarter or the quarter after. He is still full-fledged governor, and they want to announce the next man after he has been passed his policy. I thought it was a gracious act. And for me, the fact that they did not announce till the day of the policy confirmed to me the guess that he is not governor. Because if he is governor, they would have announced earlier.
Oh, absolutely.
And to be fair, one of my sources, when I asked him like 8 weeks back, what is this? It's like, we're just about 8 weeks to go and you're not telling us. And he said, you will know on December 9th.
Yeah.
So I think that man was in the know. But anyway, I want Asim Dhru to answer something else which the market and investors are terribly worried about. There was a big pushback from DFS and generally the government for RBI's housekeeping activities, banking regulation activities. Tamal well knows that, the expected loss provisions, the extra provisions for infrastructure, the liquidity cover ratio. Lots of new rules are sitting there. And obviously, PSU banks are telling the government, give us more time. Do you think, Asim, that now with the man coming from Mint Street, these could be, banks could get more time and these could be pushed back?
First, I think we should acknowledge, with a standing ovation, the way in which the governor has ended his term. And, and as the new governor walks into the pitch, the realities are a little different from what the previous governor had. We are now faced with a slightly slowing economy and inflation, which is still persistent. Now, in terms of regulations, regulations is every governor has had focus on a particular activity that was considered critical by the governor. So whether Raghuram Rajan focused on cleanup of banks' balance sheets on the wholesale side, and Mr. Das is focused on two main things. One is cleanup of the balance sheets on all sides, not just wholesale, but the retail side as well as focus on customer fairness score, which was not what the earlier focus was. So to that extent, there's a balancing that has been attempted between the two. And as far as a lot of these ECL and provisions and those goes, it was always the view to move the entire banking system to index. It was just that because nationalized banks wanted more time, they said that NBFC should move on this, while public sector banks and private sector banks will continue. So there, you cannot have a system working on two different ways of reporting of the same business. So eventually, the move to index is a given. Enough time has been given. And I think that it's very likely that the policy will be carried through.
Okay. On the same lines, Mr. Dhruv, something that Governor Das will be remembered for is the way he called a spade a spade. He didn't care which bank it was, who was the promoter, how big the entity was. But if there were deficiencies in service or whether in compliance, we all know with Kotak Mahindra Bank, with Paytm, with so many other institutions, IIFL, on some of the gold financiers as well, the actions were stringent. They were extremely precise. So was the communication. I mean, we got used to the era of very clear, long press releases detailing why someone has been stopped from issuing more cards or why someone cannot onboard more customers through the digital route. On some of these fronts, do you think there will be continuity? Or could there be a slightly different approach, new man bringing in his own approach? What would you expect on the compliance part and the other regulatory issues?
What this governor has brought about a change in overall way in which communication has happened to the industry at large is that the earlier governors used to be a lot more cryptic, a lot more private, and not so expansive in terms of laying out their thoughts. The governor has realized two things. One is that the people have taken penalty as a cost of doing business. That's what's happened in the US as well. And therefore, the instruction is very clear that it's a one strike out. You either follow the law or you'll be called out. So, and if you take an analogy, in a class, you don't mind a strict teacher as long as the teacher is fair. You actually protest to unfairness of teachers, or when you think that you have been singled out while others, bigger guys, have got away with it, which has always been the complaint that we have in a lot of other things in the Indian economy. What this governor has ensured is that nobody has any chance of complaining that they have been singled out because the law has been applied equally to large players as well as small, to foreign players as well as public sector as well as private sector, to banks as well as NBFCs. Every governor has a slightly different style, so I'm sure that it will not be exactly the same way. Some fresh thinking, will definitely evolve both at the MPC level as well as in the way communication happens. But largely in today's day and age of social media, if you are not really out there putting your views up there, you are then opening the field for speculation. So in a way, I hope that the same level of communication is maintained with industry concerned.
Okay. Kamal, I wanted to get back to that pet theme. Patra not there after Jan. New members, new captain and vice captain, as Surabhi put it. And, the first policy is normally seen as from the shadows of finance ministry. Then he becomes an RBI man. So just your thought, will he have a problem with Patra going away? And, how is he likely to tackle the immediate problem of slowing growth and rising inflation?
Yeah, Lata, you are exactly on the ball. But before that, I just want to highlight one thing. If you look at the past few governors, when they came and right now, I think things are comparatively benign compared with that. Like say, Subbarao came and that within a week we had seen the Lehman crisis. After that, Raghuram Rajan tapered tantrum and rupee had a free fall. Next, Raghuram Rajan's successor had this demonetization. Shaktikanta Das, during his tenure, had to face COVID and multiple other things. So right now, the growth inflation dynamics and rupee under pressure, but that's a part of life. I don't think there's any huge, massive crisis is looming over India, which Dr. Rajan or Subbarao, even Urjit Patel, they had a much tougher time. And in the 90s, Dr. Jalan. So we don't see that kind of. Yes, we are talking about geopolitics. We are talking about what's happening, Ukraine. You were talking about Trump, etc. But still, we have pretty, barring the second quarter of the current fiscal, we have growth on firm footing. We have inflation, which is being tackled with extreme care. And we have pretty large foreign exchange reserve. So I don't think it's a very tough time as such. Having said that, 5 of the 6 members of MPC will be new in the February meeting, except for one Reserve Bank of India person. 3 MPC members from outside, which for them, December meeting was the first meeting, and Michael Patra and Governor Das would be away. So yes, that's the thing. I mean, how do you? But whatever I heard, Mr. Malhotra is very sharp. His understanding is pretty fine. He is not new to the financial sector. Bankers who had seen him in the DFS as a DFS secretary said that he's cool. He's very sharp with numbers. Apart from his other attributes, like he understands technology and all. But 5 new members at MPC, that's a tough call. So it will be now, we have to wait and watch who replaces Patra. Now, will Patra will get yet another term? I don't think it has ever happened that when you had applied, put up the ad and asked for applications for the job, you reverse it and the person continues.
Right.
I don't think that's going to happen.
Take that point entirely.
So we'll definitely get a new RBI deputy governor. So will they go for an economist?
Right.
That's what. Or that's the point. I think ideally we should have an economist at that point. Right.
All
now.
right, we take that point, Tamal. Thank you so much for joining in. Thank you, Asim. Thank you, Lata, for taking us through that conversation as well. As Asim pointed out, we need to celebrate the great tenure of Shaktikanta Das and at the same time wish the best to the new governor as well. Tune into CNBC-TV18 for the governor's last press conference, the current governor's last press conference as the RBI governor later this morning at 11:30 a.m. Take a short break. On the other side, we will have with us the management of Patanjali Foods. Sanjeev Asthana, CEO, joins in to discuss the demand slowdown concerns as Godrej Consumers' weak mid-quarter business update came by. Welcome back. You're watching us here on Corporate Radar. The market consolidating with now a positive bias, but one of the stocks on our radar is Patanjali Foods. Remember, FMCG stocks yesterday were under pressure. They felt the demand slowdown as worrying commentary came in from Godrej Consumer, dragged the other FMCG stocks lower as well. The key point from Godrej Consumer's mid-quarter update that may impact all the other FMCG companies is that 20 to 30% rise that they've seen in palm oil prices. The reason why that's important is because it's an important input for a lot of the personal care products like soaps, etc., and also a lot of the food products too. Sanjeev Asthana, who's the CEO of Patanjali Foods, joins us now. Sanjeev, good morning. Good to see you in. A large part of your revenue, of course, comes in from oil, but increasingly you've seen a higher proportion coming in from non-oil business, FMCG, and more so post the acquisition of the home and personal care brands from the parent Patanjali itself. On higher palm oil prices. Can you tell us what's the kind of impact that your soaps portfolio has seen in the third quarter so far, and also your other food portfolio, which does use palm oil as raw material?
So high palm oil prices, clearly have a big impact. There's no question about it. Whether it's the soap prices, as we've seen that company after company have taken a price increase. Likewise, palm is a big sort of cost item in the manufacturing of biscuits and confectionery. So it always has an impact. And I think certainly it puts a lot of pressure both on the bottom line as well as the managing of the cost, of palm oil and the other ingredients. That becomes critical. So overall, net, I see that there will be some impact, not that substantial in terms of our own overall portfolio, because it constitutes a critical part of it. But I think it will have some impact certainly on the cost of inputs going into the manufacturing of these products.
Could you give us a number? What proportion of your revenue is exposed to palm oil as an input, and how much has your input cost increased by in that portfolio?
So palm has got two dimensions for us. One is that we're the largest sellers of palm oil in the country in our edible oil portfolio itself. So that is some impact in terms of the the demand elasticity on the price elasticity. But in terms of what it goes into the biscuits and the soaps, overall basis. So their contribution is about 20% in case of biscuits, and it's about 20% plus in case of the soaps business. So net on an aggregate basis, it would have an impact of close to about 1,000 crores of palm oil gets used into various businesses for us.
Okay, 1,000 crore of palm oil gets used into various parts of your business. The prices have increased by about 20 to 30%. So 200 to 300 crore has been your overall year-on-year cost increase. But you also said that the offsetting factor of that would be your own palm oil business that you sell through in your edible oil. So what could the benefit out there be? Because, this edible oil cycle has been in your favor. Last quarter, you did a revenue of, volume growth of 4.6% with an EBIT of close to 200 crores. You had guided for an EBIT run rate of around 250 odd crores. Do you think that can increase? What's a sustainable number here and volumes?
So just to clarify that part of 200 crores, most of it is a pass-through basis. So
Yes.
It doesn't have an impact directly into a bottom line, only it has a partial impact. And the second part is that in the edible oil, entirely 100% of the price increase typically tends to get passed on to the consumers, and it gets priced in. So it's normally very beneficial for us. If we see the second quarter results and the third quarter, the bump in the prices will actually be beneficial because most of it is on a pass-through basis, and the value, in case you're holding on to the inventory, typically it's a value addition in terms of the P&L, in terms of the business, etc. So this rise in prices for the edible oils is positive. It is less positive in case of the ingredients that we have, but the impact is not fully passed on to the consumer. So there's only a partial impact that we see in the P&L.
All right. Hi, Mr. Asthana. Good morning and good to see you. Ben, let's talk about, the integration of Patanjali's HPC business into your own. How has the scaling up been, and what are the targets you have before you?
So very early days. We're just still 2 months into the integration now. 1st of November, we integrated that. It's going on well. Right now, we're just going through the process of integrating, the various elements of terms of teams and distribution, etc. By end of December, we are reasonably confident that it will be fully done and sorted out. So next quarter will be sort of positive, in terms of the overall on a fullness of, scale as it is being planned. And in the first 2 months, it has been pretty much on its course. November was pretty good for us. And December, we're hoping that will also be positive. And I think on a fully matured and fully integrated basis, I think 1st of January, we will start on a full steam.
FY26, what could it do? I think you were looking at a number of around 1,500 crores for the year. So FY26, what should the rough revenue number look like?
So on the HPC business alone, we said that we projected 15% growth rate. So typically, we're expecting about 3,200 crores of revenue in FY26 for the HPC business.
Got it. All right. And also give us a sense of festive demand, Mr. Asthana, for the verticals that you function in, oil as well as FMCG business. How has festive season been? And also your sense with regard to rural as well as urban demand. So
there are two sides to it. Festive season was good, but slightly muted. And in terms of the urban demand, clearly there are challenges. We're seeing some bit of contraction there. The growth rate has been, rather slow. And rural demand is still, while remains positive, but we'll have to see next couple of quarters that how it goes. But overall, slight dip in the FMCG growth rates. We still are maintaining sort of the food business. We'll maintain between 9 to 10% growth. And in the HPC business, we see a lot larger opportunity of 15% growth. So we're pretty much holding on to that projection for us.
So first half of this year, your revenues are at around 15,400 crores, EBITDA at 855 crores with a net profit of 572 crores. Give and take everything, what is the second half of this year looking like? And if you could give us overall projections for FY26 as well.
So certainly better than the first half. It will be premature to give the exact numbers. Certainly better than the first half, and because the lot of products that we have, the categories typically tend to pick up in the winter months. And FY26, our projection very clearly is that, the growth rates in the edible oils of about between 4 and 5%, in foods business about 10%, and the HPC business about 15%. So net, the company should see an, uptick of close to anywhere between 7 to 8% in terms of the overall revenue. And earnings growth of close to about between 8 and 10% is what we anticipate.
Okay. All right, Mr. Asthana, we will leave it on that note for this morning. Thank you very much for joining in and giving us some perspective on the business. Quick check on the market. The market's turned color. Remember, we were talking about this little tinge of red at around 9:30, but now the buyers are here. And actually, banks are seeing good traction all over again. The Bank Nifty is leading the charge on the large cap screen. The gain is about 0.25% on the Bank Nifty. Nifty is also positive. And there are some large cap names from the IT side, like Infosys, which are also contributing. Infosys is up about 1.5%. Shriram Finance is having a great morning, and Shriram Finance has been on a tear last couple of weeks, almost 2% up on that stock. Wipro, HCL Tech, these are the other tech names that are up and about. SBI, I can see. So basically, the twin engines, banks and IT, both look like they could be firing away.
A couple of the consumer discretionary names as well doing extremely well. This morning we have United Breweries, which has moved to the high point of trade. That's doing well. Nykaa too has seen a decent traction. In fact, from its lows, the stock has recovered about 25%. Currently sitting with a gain of almost 4.5% for that stock as well.
Okay, all right. So that's the market. And on that note, the green note, it's a good time to look at the Motilal Oswal wealth creation study. They've come out with their latest one for the year 2024. And to take us through some of the key highlights and the findings, who else but Mr. Ramdev Agrawal right here with us in the studios. Ramdevji, great to have you back on, and thanks for joining in.
Very good morning.
So it's been an interesting year for the market, good year. But
good year, yes.
And I was looking at some of the highlights of the study as well. And this year's study talks about how you can create perhaps a lot of wealth by looking at bruised blue chips.
Yes.
Bruised blue chips. So very interesting.
How did you like the title?
I really liked it. And then I looked at some of the examples. So I think you picked up stocks like M&M and ICICI Bank. And first I was like, how is M&M a bruised blue chip? It's one of the best performing stocks this year. But I realized you're talking over a longer term time frame. How from being a bruised blue chip, this is a company that's become such a huge wealth creator.
No, it's a robust blue chip now.
It's a robust blue, bruised to robust.
Yes.
So why don't you tell us more about the thought process and the thesis
here? The first thing is that everybody would like to see in the portfolio beautiful, all the robust blue chips in their portfolio.
Yeah.
But all the robust blue chips are very expensive to buy. And typically if you buy at those fancy prices, the returns are very at market level or something like that. So how do you make above market return while having blue chips in the portfolio?
Right.
So the best time to buy is when they are bruised.
Yes.
Bruised means they are a bit scratched. I mean, they've not lost the blue chip status, but they are in bit of trouble. Maybe because of their own doing or external forces or competition or misallocation of capital. Something, few things come together and the companies are in trouble. Okay. And good thing is if you think that how come these kind of companies can be in trouble? But if you do the data, then you realize every year 40 companies, they get into trouble. 40 blue chips. So first thing we said, actually we started this study, we wanted to understand turnarounds. How to make money out of turnarounds, like Suzlon and Mahindra, JSPL. There were tons of money. So how to get this? So you've got to have good framework. In market, if you have a framework, then everything is sorted.
Sure.
Whenever the opportunity comes, you can use the framework and go about it.
Let me talk about one
Yeah.
company, sir.
Yeah,
You
yeah.
know, but when you talk about blue chips,
yeah.
let's talk about Asian Paints. You know,
We'll come to that. No, it's just getting bruised right now. So we'll come to that. First is about the framework.
Yeah.
Framework, how to pick bruised blue chips. So first thing is to define blue chips. The world talks about blue chip, but where is the definition of blue chip?
Nowhere.
Certain
Nowhere.
market cap, certain...
Yeah. So this is where because if you want to do a study, you got to have some hang of the numbers.
Yeah.
So that's where we try to define the definition of blue chips.
Right.
So definition, when we said, I was very clear. Blue chip definition is like 20% average ROE for 10 years.
Got it.
Okay, so that gives about 1/3 of the 250 companies, top 50 companies as the blue chips. Then the guys, they said, say Reliance or a lot of big companies, they don't have 20% ROE for 10 years. So are they not blue chips? Of course they are the blue chips.
Yes.
So we said Nifty, any Nifty inclusion is also blue
Is
chip.
also blue chip.
Yes.
So first 50 is the whatever Nifty companies, and then on top of it, any company which has more than 20% average ROE for 10 years. Very stringent norm, I can tell you this.
Correct.
So we came across about 107 companies in total.
Okay.
So then we started, I said, now we are settled with the 107 companies to study.
Yeah.
Then we looked around, when you do data for every 5 years, you come across something like 80 to 100 companies every year. So out of 250, about 1/3 is always, or a little more than 1/3, maybe 40% is always a blue chip status.
Okay.
So, and actually in Nifty, about 20 companies, 22 companies are blue chips. So it is very tough to beat Nifty in the longer run because they're all blue chips.
So I have a question now,
Yeah.
since we're talking about the framework, right?
Yeah.
Bruised, to identify what is a bruised blue chip that
Yes.
can turn around, right?
Okay.
Because there
Yeah,
could be
yeah.
companies where certain, very big things have changed, that maybe they're going to lose their blue chip status. We don't know.
This is where the blue chip comes.
Yeah.
The blue chip, see, first thing is what is bruised. So one of the book we read, so there he said 50% from all-time high, or say last 5 years high. So that gives some kind of number. So in last 5-7 years, the companies, whatever high they've shown, if somebody has shown $1,000 and now it is horrible at 450, 500.
Right.
The moment it breaks 50% from that high, you are in a watch list.
Sure.
No, you're not decided to buy. It is in watch list. Please don't mistake. So you're in watch list. Now, why blue chips only? See, any company can fall. The companies which are not a blue chip, small company, they can also fall, but they don't have the competitive edge. See, it's like a Rishabh Pant getting injured. He met with a car accident.
Yeah.
2 years he was out. He went to Europe and all, and then he came back as
back in
again a
roaring
captain,
form.
roaring. So this is what the blue chips character is. When they lose the status, like Virat Kohli can be down for say 2 or 3 matches, but when he comes back, he hits century.
Okay, how do you identify that this blue chip which has become bruised, what are the characteristics that this is going to be the turnaround story?
So first thing is that it is a blue chip. It is erstwhile blue chip, confirmed blue chip.
Yeah.
Now, so they have a characteristic of the competence to come back. Then, see, you can't do it only statistically.
Yeah.
Then you got to have foresight that this company is going to survive and prosper. That's a call which is more of an art than any kind of a number.
Now you've created a watch list.
Yeah.
Watch lists are blue chips which have fallen 50% from the top.
Yeah.
The second part of the process is start to buy, awaiting buying triggers.
Yeah,
So at what point, because the statistical analysis says that from the lows these stocks have moved this much. Very difficult, it better than everyone else to
So that is
catch
from the
bottom.
point of maximum pessimism. Okay.
How do you define that?
Yes. Point of maximum lows.
Nobody's willing to buy in the market.
Yeah. So
almost.
But who's to say that a stock which has fallen 50% won't fall a little more than that?
no, it
How
will
do you start
fall.
buying?
It will fall. Particularly if you buy, definitely will fall.
Yes.
Because bottoms are.
The honest truth in life in the market.
So bottoms are made for fools and liars. You will never get it.
Exactly.
Because bottoms are always, when you look back, then you realize that was the bottom.
Exactly.
So you have to buy when you are comfortable. See, like say Mahindra & Mahindra. It was a say 600 rupees stock, 570, 580 rupees stock. After it became 280, and when they sold Sangyong, the major trouble is sorted.
Yeah.
Right.
In fact, we didn't believe that, is the Sangyong actually gone? There's no liability left.
Yeah.
They said, yes, it is gone. But nobody believed. For 1 year, nobody believed that it is gone. We thought the roundabout was the
overhang
loss.
will continue somehow. Yeah.
But nothing. They cleaned it up completely. And then, from the 300 rupees, see, in buying blue chip, the fun is that blue chips do come back to their old high. So there is asymmetric payoff. So if 100 rupees stock has come down to 25, the 3x is almost guaranteed if you buy it right. So, but the 3x happens in 3 years, which is 45% return, you know, or 50% return. So this is what asymmetric payoff is an opportunity.
Okay, so now let's go back to the question Nigel was asking you, right?
I'll ask it.
You please. Yeah, that's the
Is
Asian
it
Paints
bruised enough?
example. Yeah.
Asian Paints down 30-35%, I think so, from the recent peak. What about that number?
Yeah.
35 and 24%.
Approximately.
Yes.
So it's not bruised enough?
It is bruised, but it is getting bruised seriously.
Right.
See, what is seriously bruised? If it is not bruised 50%, then it's like a correction. It will go back. It doesn't come in my list. My, you know, kind of a bruised blue chip. But confirmed bruised is like after 50%. So, but I don't wish anything like that.
Yeah.
You know, I want the stock to go back to 3,500 immediately. But if by chance it falls below, then it becomes very intense. See, because there is an intense war. See, there is a consumer slowdown for sure. Okay. I mean, I don't know why nobody's painting the houses, but there is a slowdown in the consumption of paints somehow. And in that, then your builders, they want to create a niche for themselves. They have put up 10,000 crores plant, 4-5 plants they've already started. So there is a massive push to garner market share. So obviously it is going to come from, in a slowing, if it is market is growing at 30%, nobody realizes the new guy comes in and takes it to 3%. But in a slowing market, if you want to take 4-5%, I think it hurts the existing guys. And if the existing guys are not willing to give, then there is a price war or discount war. And that takes away the profitability of the industry, like what Jio did to the entire telecom industry. In fact, where there is a very intense competitive war, typically the industry profitability takes a dip significantly, or it goes to the level of literally zero profit while the war is on. You know, you remember PNG and Lever. So those are the things. I mean, I don't know whether it will be as bloody or not, but markets are very skeptical. And see, markets live by the quarter. First quarter result is bad. A lot of people, they come and buy. Then what happens is, the guys who have bought, the second quarter is also bad. Because it is not a 1 quarter war. It might be a few years. So in second quarter, when the result is bad, the first quarter, the guys who have bought, they come to sell. So like that, the spiral keeps building up.
Would it then make sense to add another variable to this definition of bruised, apart from just price, add time as well? Because Asian Paints down 30% from highs for 3 years would automatically mean it's down 50% from the perceived highs because of the time factor. Would that make sense?
We have kept it simple. You can see, these are all the ways to think. How you want to think, I mean, how you want to add up your way of looking at things.
Yes.
We are not looking at underperformance. Underperformance, if you look at, then it might be 60-70%.
Exactly.
Because market is up 50% and you are down 30%.
Yes.
So,
relatively,
but then we have not put that, but it must come somewhere in the picture.
But at current reckoning, would you be a little bit positive from these prices on Asian Paints?
No, I said
not yet.
Till 50% done. See, what used to happen was earlier, if any company is in trouble, I used to think, thank God I don't have it. You know, and don't bother about it. Now I see opportunity in them.
There could be an opportunity.
That's
a very
the basic
interesting
thing.
mindset shift.
Yeah, so we wanted to buy all the healthy companies, go QGLP, all the quality and growth. Now, bruised quality and growth.
How interesting. I mean, what a different way of looking at things. But also, what's on the watch list now? Which are the top bruised companies? So
we have given 11 companies.
Which are top of mind for you in terms of the watch list?
So 2-3 Adani companies are there in the list. They have been bruised quite deeply, some of them 70-80%. Then you have Asian Paint, then even our dear Avenue Supermart is down about 30-35%. Then because there is again, you know, massive competition coming from Zepto, Blinkit and Zomato. So that is hurting, you know, at the margin, not really, but at the margin in terms of growth.
So let me ask you, let's take Avenue as an example, just to understand how the study is to be applied. Hectic competition, numbers have not been good, there's disruption playing out in the distribution channels. But you know, it's a pedigreed stock, pedigreed management, quality, you know, governance, all of it going for it. So how do you decide whether the time has come to say yes to this bruise?
I'll start applying my mind only after 50% correction.
Okay, so the starting point is 50%.
See, conditions will be very different, I can tell you this. But I remember at 70 rupees, Telco looked untouchable. Rakesh, before just passing away, he bought tons of it, like 4, 5, 6 crore shares.
Okay.
Yeah. So he was the master of the game. He did Lupin, he did Titan, he did JSPL. I don't know how much he bought, but Telco and Indian Hotel was the last few months before he went. So what I'm saying is he was the master of the game. He always used to tell me, Ramdev, I'm buying this. But I never could understand why he's buying. Now I can understand. But it's too late.
Beautiful. Beautiful.
Just the perception change, not a question, is that earlier when a stock fell, you said you were feared. Now you're looking at it as a shopper. You know, a lot of the people who go shopping, they be like, oh, there's a 30% discount on this shirt, 40% discount on these shoes. You say, no, these are blue chip stocks, they're 30, 40% discount, 50%. Unless there's a 50% off, Ramdev is not going to the shop.
Yes. I said cricket analogy.
Yes.
If Virat Kohli is injured, it doesn't mean that he is no more a blue chip batsman. He always, because whenever you give him the bat, he can hit a century. You know that opportunity is there.
Mr. Agarwal, I'm just hoping in the third test match and all this comes through. We desperately require the boys need to come in there and perform.
Because it is one up, one down. See, they cleaned up Australians on the first match. Second match, they got cleaned. Third match, they'll come back again.
Exactly. That's what we're hoping for. Finally, you know, before we let you go, we're done with the cricket. How are you reading the economy? You know, suddenly these FMCG guys are coming out with these shockers. So staples are struggling, but discretionary is doing well. Again, but if I look at the auto space, two-wheelers are doing well, and suddenly there is some inventory build-up in passenger vehicles. So just a comment on that before we wind up.
So again, in this study, we have this market outlook. So if you see, the corporate earnings started climbing up from 2020 onwards. So there is some fundamental shift in the way Indian economy is being run. Till about 2020, it was dominated by consumption. Okay, so consumption stock went to the roof, 100p, 80p, that became the norm, irrespective of the growth and all. They were fantastic franchises, but it was overvalued. Then comes the capital goods. Suddenly the whole tide turned and the government expenditure from 3% to 6% fiscal deficit, the government started pumping all the government expenditure. And hence all the capital goods companies, defense, capital goods, railway and all sort of L&T and all. So that's the theme. That theme is not going to change. And I think new governor has come. I think he's the guy who comes from Delhi. He understands everything about the tax collections and all. And I'm sure the credit flow is slowing down and hence the GDP growth rate and the tax collection. So his job is going to be quite intense. I think today we'll listen first time.
At 11:30, we'll have Governor Das for sure.
Yes.
And let's see if we get any kind of statements from the new governor as well.
Of course, he'll be very happy to make statements.
So, sir, finally, and it's been a great year for the markets. It's been volatile, up and down, but I think investors overall will be happy.
Next year will be a fantastic year because I see last year we got $60 billion from DI. Okay, foreigners, they were absent. I'm just saying one up, one down. Now next year should be a positive year for FI. If FI is even $20-25 billion by chance, I think you will have a party. Big party.
In fact, we'll have the DIR number today again. The mutual fund numbers are coming out today.
One way.
One up, one down. India's coming back in the third test and FIs are coming back in 2025.
Both up next year in 2025. Thank you very much, Mr. Agarwal. Always a pleasure. Thank you for educating us and for having been with us through so many years, including 2024. Wish you and your teams a very, very happy new year.
Thank you. Thank you.
All right. Well, on that note, we do have to take a very quick break. Come back on the other side. We'll have Mitesh Thakkar joining in, get some quick technical ideas going for the market. Welcome back. Well, let's quickly look at some of the trades you can perhaps work with this morning. The markets managed to look at a bit of a buy on the dip. We've got Mitesh back with us. Mitesh, any ideas or calls on the index and, of course, individual stocks as well?
Good morning again. I think on the index, my view is still positive. But as I said, I think, we'll try to buy it near the lower end of the range. That continues. But Nifty IT is the index which clearly has some strong momentum today. And that's where the action could be. I would recommend a buy on Infosys with a stop at 1930. Disclaimer, I have some call options positions, so there's vested interest. But this is breaking into all-time or fresh highs. And as long as 1930 doesn't get taken away, good chance that Infosys in the next few weeks could head towards 2020, 2025 to begin with, that being the first target. 2060, 2080 is the zone which I'm actually looking at. Look for the stock to hit. So that's one. The other one is L&T Finance. That's another stock which has given a good breakout today. So L&T Finance, I would recommend buying. Keep a stop just below levels of 147.5. Look for target of 157.
Okay. All right, Mitesh, got that. Thanks very much for the calls. We'll touch base again through the course of the day. Right now, a quick break, but on the other side, Lata comes back with our special segment, Market Masters. Today, she's in conversation with Bhanu Baveja of UBS Investment Bank to talk about the market outlook for India in 2025.
Welcome back to our ongoing year-ender series, Markets in 2025. My guest today is Bhanu Baveja, Chief Strategist at UBS Investment Bank. And I'm going to ask him more about the world, about which he has a better view than most of us here in India. Bhanu, thank you very much for dropping into our studios.
It's a pleasure.
Now, a month from now, or a month plus 10 days from now, we are stepping into a Trump world. Can you just give us a peep into how it will look? Until now, it's all guesswork. We're extrapolating Trump 1.0 into 2.0. You tell us, what do you think will be the main contours of the new 2025 order?
So the markets are already in a Trump world, right? So the markets have been anticipating Trump even when Trump wasn't elected and even when the polls were saying that it's unlikely that he comes on. So if you look at how stocks have performed, if you look at how term premium and the fixed income has gone, they were fully anticipating Trump. And after the election, you have seen many of the Trump trades also play out in earnest, right? The dollar has been strong. Financials have done quite well. The term premium in the yield curve has remained quite high. So most of the Trump trades are playing out. My sense is that once you actually get Trump's inauguration, there could actually be a phase where you actually have a reality check, because you are pricing in most of the good things that Trump is going to do for the markets. You are pricing in deregulation, or at least, even if it's not fully priced in, you're talking to a considerable extent that's a part of the market narrative in financials, in energy, in real estate in the US. You're thinking about deregulation. You're looking at lower taxes. But again, if you look at 2026 earnings, pre-tax and post-tax, you can back out from there a tax rate, and that tax rate is 19%, which is below the 21% you are. So you are expecting lower taxes. What you're not expecting, and I really struggle to see this in any asset class, is tariffs. Now, all media channels are sort of crying themselves hoarse about how tariffs are coming. Nothing in the market says tariffs are coming. The markets are smart, you have to give them that. But basically what the markets are implicitly assuming is that this is a transactional position, that Trump comes in and then he negotiates, and then, you know, you pull back. And so tariffs are not a long-term issue, and it's not going to hit the economy.
He's using it only for
it's a bargaining process, right? He's getting his way. That's an assumption, right? And that's an assumption which I think has been cemented by some picks that he has made in his cabinet, like Scott Bessent, really has a conservative view on tariffs. He's always been saying, in fact, on your channel in the US, he's been saying that we will never take a maximalist approach. But it's not clear at all that he will have the call. The Ministry of Commerce, USTR, US Trade Representative Office, will have the call, and they are talking about tariffs. So that's not priced in. That's one of the reasons we think the markets will face a reality check. By the way, most of our clients disagree with us. They think the US economy is blue hot right now. It is. And they think that moving forward, earnings will continue to do well, valuations will continue to go higher. I think it's a very different setup from Trump 1, where it's hard to see valuations rising. I mean, consider where credit spreads are in the US. They're the tightest they have been in 25 years in this century. Whereas in Trump 1, you had a lot of risk premium on the table that you could shrink and then see valuations going up. So different setup.
Okay, so how do you visualize yields going? How do you visualize the Fed reacting? And more importantly, the dollar?
So very importantly, even before we talk about sort of what Trump's influence on all of these is, we have to ask ourselves, what happened to the US economy in the last 2 years, right? We've heard this metaphor. It's
strengthened.
It's strengthened, and the metaphor that's used very often is that it's been exceptional. So what was exceptional? Was productivity exceptional? Or was just consumer exceptional? In my humble opinion, it was just the consumer that was exceptional because of exceptional stimulus. So this is banal, old school factors like stimulus, like immigration.
Fiscal steroids.
Fiscal steroids, as opposed to new world productivity. If that diagnosis is correct, then in the next 2 years, you should see a material step down in consumption and therefore a material step down in US growth. So we are not looking for a recession, but we are saying US nominal GDP goes from a very high 5.5% to a slightly below consensus 3.9%, right? If that happens, inflation will first come down. Tariffs, immigration, lack of immigration notwithstanding, inflation first continues to come down. And what we think, therefore, is that the Fed is going to go close to its neutral, so go close to 3%. The markets are not anticipating that. The market says that it's going to go to just under 4%. So we are more positive on the Fed cutting because of lower inflation than is the street, but because we are more negative on US growth than is the street. The street assumes what happened in the last 2 years will happen in the next 2 years. So it's a case of simple extrapolation. We don't think we should be doing that.
Okay, now if the US growth is not going to be exceptional, one of the big reasons that helped India is also our growth was good because of our fiscal steroids, but also because the world was being a positive place. Do you think we're going to face a lot more global headwinds as we try to estimate next year's growth? How heavy will be the global headwinds?
The global economy is going to be less friendly than it was in 2023 and 2024 because China is not improving, right? China, despite its stimulus, will see drag in the property market. China will see tariffs compromising global trade further. So that is not a great situation. Europe is going to improve, but you'll have to look at Europe under a sort of magnifying glass to see the improvement because it's very minuscule, right? China and the US are coming lower. So that creates for lower global growth than we have been seeing in the last 2 years. We've been seeing slightly below trend global growth. We go further below trend. So we go from about 3.2% global growth to 2.9% global growth. One thing we've got to be a little bit careful about is, again, China, right? Because if the US administration was to shut down all the routes from China to the US, if they were to shut down Mexico, if they were to shut down Vietnam, the routes that China has taken to maintain market share in the US, then there's a possibility that China really dumps capacity on the rest of the world, on Europe, Africa, India, right? And we don't think of China and India as trading partners, but you look at the data, they really are. So India's private capex could be negatively impacted by the amount of industrial capacity or manufacturing capacity that's coming the rest of the world's way. So there, while the whole world is...
Trump had announced much lower tariffs than what we are expecting now or what he's saying now. We did see business confidence and business investments go down globally. We are only hoping that India is less impacted than other countries.
That's absolutely true. India will be less impacted, and compared to the downside that you could see in Europe or compared to the downside in some of the more open economies in this region, you could actually see India hold up better. And Indian markets are also sort of benefiting from not just global flows, which they haven't seen much of, but also local retail flows.
Which is what I'm coming to. How do you assess the Indian market? Forever, people have been saying that it is expensive, but it's not really given up much. It's just about 6% of the September end highs. Two different questions. One, how do you see growth, both GDP and earnings? And separately, is this flows inexorable and can the market continue despite being expensive?
It is, I love the way you frame it because it is absolutely right. You almost have to, so the delta in a cycle is going to be driven by the earnings cycle, it's going to be driven by margins, it's going to be whether operating leverage is going up or operating leverage is going down. And right now we have been in an earnings down cycle, and I think we will probably be troughing sometime soon. You can't really see the signs of a big renaissance, but it'll come, right? It'll come at some point, perhaps in the second quarter of the next calendar year. You should be able to see urban consumption beginning to does not decline anymore. Rural consumption improves, and perhaps a little bit of private capex pickup, which is not a big statement because it's been so weak. You can actually see that pickup, and also fiscal's actually been quite tight.
Yes.
Right, and so next calendar year, next fiscal year, you could see that. So it will not be surprising to see growth bottoming out after a period of consolidation. We first have to go through that consolidation. So can't sort of be super optimistic about one day we'll...
No, we're going through the consolidation. Yeah. Q2 was the quarter that hit us. But yeah, so you see 2025 as a recovery year.
I see 2025 as a recovery year, but we first need to go through the consolidation, right? So again, there's a trade and then there's a trade after the trade. We have not been through the consolidation fully. But that's the cycle, right? But what has happened in India, especially post-COVID, is that the ease of trading for many folks in the retail space has been so enhanced that people have been through SIPs and also through directly into the market, putting more and more money into the market. Now, that is a dangerous game. There's no doubt about that. But, think about what these people's P&L is, right? They have not seen a downturn. Right? We've sort of grayed our hair in these markets. We know downturns come, right? You haven't, by the way. But we know downturns come. But they have not seen a downturn. So their stop loss, they're not going to get... So they are buying the dip all the time. And for them, it's a rational response, right? If I've gone from 100 to 180, if the markets go to 150, people will buy the dip. So that's why I think we have to be careful that despite the consolidation in earnings or revenues, the dips in India, for now, could be a little bit shallow. Now, at some point, you have to pay the piper,
Yes.
right? At some point, you know, when the flows are coming down, you could actually see the opposite situation where the macro is fine, but the flows are going to turn much more negative. Everything that I'm seeing suggests that we are still quite a long way from that.
Okay,
right?
let me stop you there because I'm being warned we're out of time. So just tell me, at the moment, what you are the, you know, you manage cross assets, you're the global asset manager practically. What are your top 3 assets now? And what do you think will maybe the top 3 assets in the second half of 2025?
Right. So at this minute, we are actually playing defense, right? So we're buying very conservative sectors within the equity markets. We are long the front end. So we're long fixed income, and we're long the front end of the US. We don't think the back end comes off very, very aggressively. And we're also long dollars, particularly against emerging market currencies. So we think the INR weakens, we think CNH weakens. So these would be some of the defensive sectors, front end of the US curve.
And dollar.
And dollar against emerging markets. I think the yen is actually going to do quite well. But against emerging markets, the dollar will strengthen. In 6 to 9 months' time, if I could anticipate trades based on the kind of things that I've said to you, I see US markets actually coming lower. And then there's a possibility that markets like India could see an upcycle. And on that basis, at T+6 or T+9, you could actually see the Indian markets doing reasonably well. So that would be my trade after the trade. But we really have to go through the trade first. And there's a whole sort of plethora of possibilities.
Bhanu Bhavija, absolute pleasure having you with us. Thank you very much for giving our year-ender series such a big boost with your presence.
Thank you.
We'll have to wrap up on that note after a break, Chartbusters. Can I? Girl. No, because the next anchor is here. Yeah. Thank you very much.